Every day, the financial market throws thousands of data points at you, but most of it is just noise. Welcome to Signal and Clue, your ultimate hub for strategic filtering. We focus entirely on rigorous signal selection to deliver the macro insights that actually impact your portfolio. Our goal is simple: to shift your focus from what to trade to how to judge the big picture. If you are ready to stop chasing the herd and start executing your own calculated investment scenarios, you are in the right place. Let's dive into today's signal. The scorecard, deconstructing our prediction. Let's start today's episode with a cold, hard look at our scorecard. In our previous episode, ahead of the highly anticipated US-China summit in Beijing, we predicted a potential breakthrough, a surprise peace declaration, or a sudden ending to the Iran war by President Trump to clear the Hormuz Strait. To put it bluntly, that prediction missed the mark. The grand diplomatic performance did not happen, and the war drags on. But at Signal and Clue, we don't just sweep wrong forecasts under the rug. Instead, we dissect them. Why did we, along with much of the consensus market, get it wrong? The answer lies in what I call a prejudice build-up, the accumulation of bias. We fell into the trap of a linear framework. We treated the geopolitical crisis and the energy crisis as a consecutive single-line domino effect. Our underlying assumption was rigid. The war must end first, for the Hormuz Strait to open, for the oil shock to cool down, and for inflation to finally ease. Because we relied heavily on this linear timeline, anchored to the mounting economic pressures on Trump, we misread the true intentions behind the signals. This linear distortion is exactly what obscured our vision, and today we are resetting our analytical lens. What signals we missed? So what were the clues we completely overlooked? Let's re-examine two critical signals that the mainstream media reported, but we failed to decode properly. Signal 1. Secretary of State Marco Rubio's statement. Rubio boldly claimed, "The war is essentially over." At first glance, this sounded absurd given that artillery is still firing and geopolitical tension remains palpable. The media spent days debating the contradiction, but the true clue we missed was the internal consensus of the Trump administration. For Trump and his inner circle, a state of confrontation where nuclear options are completely off the table is already viewed as a de facto peace, a managed state of containment. Trump didn't need a historic televised peace treaty in Beijing because, in his mind, the existential threat was already neutered and stabilized under his pressure. Signal 2. Israeli Prime Minister Benjamin Netanyahu's interview on CBS's 60 Minutes. We made the mistake of interpreting his words through a broad traditional security lens. Netanyahu stated that Israel had shattered Iran's barrier of fear. We read this as a prelude to a diplomatic exit strategy, but the reality was far more aggressive. Netanyahu's true message wasn't political rhetoric, it was a cold calculation. He was proving that Iran has effectively lost its long-term capacity to dictate terms or lead the Middle East. His subtext was clear. Now is not the time to back off. Now is the time to push even harder, to fundamentally alter the geopolitical map. While we were looking for an exit sign, Israel was doubling down on strategic pressure. Signal and Clue missed this critical operational posture. What's next? Oil. New chapter begins. Now that we have corrected our frame, where is the macro signal pointing next? The headline is shifting. The raw military security frame of the Iran war is fading into the background. Moving forward, the center of gravity has completely migrated to the global economic theater, the oil issue. The players on the chessboard have altered as well. This is no longer a localized conflict between the US, Israel, and Iran. The direct primary combatants are now the world's two superpowers, the United States and China. In this new matrix, Iran and Taiwan have re-emerged as critical secondary players. Their domestic stability and strategic maneuvers are being used by Washington and Beijing to gauge, test, and disrupt each other's long-term economic visions. We are no longer waiting for a post-war recovery. We have officially entered a brand new game. Oil, new chapter begins. Investment scenario. The following analysis is based entirely on our proprietary framework and must not be taken as financial advice. As the market transitions into this new oil-centric chapter, investors can no longer afford to watch simple headlines. The correlation between war and energy prices has decoupled. If you are a strategic investor, your scorecard for the upcoming weeks shouldn't track troop movements. It must track superpower leverage. Scenario A, the supply control game. If the US successfully uses its Strategic Petroleum Reserve, SPR, and domestic shale leverage to contain oil prices while keeping Iran squeezed, expect the US dollar to regain its absolute hegemony, calming the bond market and triggering a relief rally in high-growth tech sectors. Scenario B, the secondary disruption. If China counters by utilizing its strategic ties with Iran to subtly restrict supply flow, or if tensions sync up across the Taiwan Strait, expect stagflation fears to reignite, forcing a defensive rotation into commodities, defense, and real assets. Don't look at the smoke on the battlefield. Look at the flow of the barrels. Tomorrow morning, before you look at the major stock indices, monitor the yield spreads on US Treasuries and the shipping volume data near the Malacca and Taiwan Straits. Are you going to stay trapped in a linear past, or are you ready to trade the new chapter? Decoding complete. This was today's signal. Thanks for watching. See you in next episode.